What's going on, guys? Trevor with Trevor Financial. Today we're going to be going over part two of our series of how to become a day trader. And we're going to go over probably one of the most important sections that we should have went over a long time ago, and that's emotions and risk management. Now, I know a lot of you may think I'm emotionally stable and I'm a risk taker. That's not the one and the same thing here. See, emotions play a whole nother role when you're into the stock market, and I have a few listed that are extremely vital to your success and risk management that's necessary to have when you're trying to learn how to trade. So first, we're going to go over greed. Now, greed is probably one of the most important ones because you always feel as though you can make a little bit more and you wind up losing money in the long run. And I'll give a personal example of myself. I recently went into day trading Snapchat, and Snapchat's resistance line was about $9.13. Well, their support line was $8 and roughly 98 cents. So I invested in it at 8.95, hoping, okay, well, it's gonna go up to 9.13. It kind of hit a rough spot at 9.10. I was like, all right, I'm gonna just go ahead and invest. I'm just gonna go on and wait it out, hopefully get a few more cents from it, and it wound up dropping down to $9. So instead of making, you know, 17 cents or 16 cents, I wound up making 5 cents. And it really makes a big difference when you're trying to be successful and you're letting your greed overcome your logic, and then you wind up losing money in the long run. Next, we're going to go over anger. Now, anger might sound silly, but anger is a big thing that happens inside of the stock market. Going off that Snapchat example, right after investing and losing that potential money, I got upset with myself and I made risky and just bad decisions on my next couple of trades that I did, which wound up actually hurting me even more than just gathering myself, starting over, saying, all right, where did I go wrong? How can I fix it? Where do I need to go from here? I wound up just making impulse buys and impulse sales, and it just made it worse. And that's what goes into the next section. Impulse buying and impulse selling has to be probably one of the worst things you could possibly do. An impulse buy is seeing a stock going up 10 cent, 20 cent, 30 cent, and then you're just like, cool, it's going up, let me just hop on it. But you don't understand where it usually peaks out at or why it's even going up that high. And you hop into it not knowing that, all right, it's only going to go up to $1.50, and you hop on it at $1.40, and then you think, all right, it's going to keep this trend going. Then it declines, and you don't understand why, and now you feel like you got robbed because you didn't know, and you didn't do your research before. You just kind of jumped on it just to jump on it. And it's kind of like impulse selling. If you see the trend going down and you just sell it right then and right there because you just don't want to possibly lose any money or anything, those are those impulse things that you can't do, because in the long run it's going to hurt you even farther. So next we're going to go over sadness. See, sadness is when you lose. And again, just like Casual Friday said, you have to expect failure. Now, if you don't expect failure and you go into the stock market thinking that you're just going to knock it out and it's going to be a one-day thing, you're just going to be good at it, then you're going to be sad a lot. And it's just one of those things that you have to be able to overcome. See, sadness comes when you fail at a trade. Sadness comes when you come out red one day. Sadness comes when you don't jump in where you want to jump in, or you forgot to get out of a position and your account starts to deplete. That's what sadness is. And you have to be able to overcome that sadness in order to be a successful trader, because happiness comes with trading, sadness comes with trading, anger comes with trading. Every emotion comes with trading. You have to be able to overcome those emotions to be successful in trading, which being tired is something you shouldn't do when you're trading. See, if you're tired when you're trading, you're not focused, you're not paying attention, and you're going to wind up making simple mistakes that could have been avoided if you weren't tired. So if you're trying to do the stock market after like a long day of partying, or after a super long night, and you just kind of wake up last minute, just kind of jump up and decide, okay, I'm going to go into the market today and I'm just going to trade these stocks without actually doing any research on them, you're going to be tired. You're going to do an impulse buy, you're going to mess up, and you're going to be mad. And then at the end of the day, you're going to wind up being sad because you didn't do any other research, which these are some of the emotions that you need to try and avoid, or at least know how to overcome. Because if one of these happen, more than likely another one will happen following it. If you get greedy, you're going to get mad. If you get sad, if you do impulse, you're going to get sad. If you're tired, you're going to wing it, which, again, going over wing now, winging it in the stock market is not something you want to do. If you don't know what you're doing, Don't try and trade actual money. Try and paper trade. Paper trading is not a bad thing. I know plenty of people right now that paper trades. It's not, you don't get frowned upon. You don't, nobody doesn't like you more than the next. You won't get made fun of or anything like that. It's a logical decision. Paper trading over winging, I would take that any day. People ask me now, how do I get into the stock market? Try and start off paper trading. Learn what the stock market is before you try and decide, okay, I want to get into the stock market, because getting into the stock market might not be what you're expecting it to be. So you need to make sure that you have these emotions in check to where personally you won't have a problem dealing with these emotions if one of these emotions arises and you're like, okay, I've been here before, or I know how to handle this because I know that this is one of the emotions that will arise. Because if you're not emotionally ready for what could possibly happen in the stock market, you're destined to fail. And I hate to say stuff like that because it really steers people away. But it should be a certain motivation, a certain motivational point put inside of you so that you'll know, okay, I know what I'm doing now. I came to expect these. That's the kinds of things you have to worry about. You can't go in there and expect to walk out happy every day. That's not the case. Friday, I didn't even walk out happy, and I had to overcome it, figure out what I needed to do differently. And Monday's going to be a better day of trading for me. It's just how it is. I mean, I'm sorry. Tuesday is going to be a better day of trading for me because Monday I will not be available to trade. It's so weird. But anyway, risk management. We'll go over risk management now. Trading the correct stocks. Now, when it comes down to trading the correct stocks, you need to make sure you are trading the correct stocks. And I know that sounds like a double negative because I just read it off there and I said it again, but it makes sense because if you're not trading the right stocks, you won't be successful. How do you find the right stocks? You have to find it with your limits. You have to set your own personal limits of stocks that will look good to you. What is their volume? What is their gains? What is their gap? What is their lows? All of these things come into effect when you try and make sure you're trading the right stocks, which setting up your scanner and scanning for the right stocks will make it a lot easier for you than just trying to go in there and find individual stocks one at a time to try and find the right stocks. When the market's about to open, you got to look at the scanner, you got to look at the names, you got to look at the news that might be coming out on it. You have to look at a lot of stuff that you need to ensure that you have before the market opens. And if you wait until the morning of to try and find the right stocks without knowing what you're doing, you're going to wind up spending more time looking at one when you could have looked at 10. And now you're only trading 3 stocks where you could have traded 10 stocks because the other 2 you probably are just going to wing because they look good, What is your stop loss? You have to set a stop loss. And stop loss is what helps you not impulse sell. See, a stop loss is, all right, if the stock is selling at $8.90 right now, and its support line is $8.85. Is your stop loss going to be $8.85 to try and risk possibly getting more if it has a drop and then it comes back up? What is your stop loss? Because if you don't set a stop loss, and let's say you're tired, or let's say you're just not paying attention, or you're researching another stock, and you're dealing with this issue, or not an issue, but you're dealing with this other stock that you have to worry about. You probably won't pay attention to your position on this stock, or the stock that's going down. You won't pay attention to it actually depleting. So you have to make sure that you go over what you need to go over and set your stop loss to ensure that you're maximizing your money and minimizing your loss. That's just simple, stock market stuff. I mean, you should always do that. You should always have a stop loss set to where you won't lose so much money. And what size position should I have? Now, if you're doing certain maths in your trading day and everything, and you feel like, all right, let me see how many I need to do or how many I want to do. You need to set a goal. You need to set what you want to make, how much you want to make, and it helps out significantly at the end of the day. Because let's say you want to make $10, and let's just do this because it'll be a lot easier. Let's say you want to make $10, right? And you buy a stock at 10 cents, right? All right. So if you buy 10 stocks, if you buy 10 of this same stock at 10 cents, you've spent $1. Now, let's say this stock jumps up 10 cents. So now you spent $1 and you've made $1. So should you spend $10 and buy 10 stocks, or should you spend $50 and buy 500 shares? I'm sorry, not stocks, but 500 shares. You know, and you have to establish 10 stocks, 100 shares. I'm sorry, or 10 shares. Yeah, 10 shares. Okay, I did that right. I had to think about it. But if you want to maximize your money, you have to figure out what numbers make sense to you. So you have to say, okay, if I want to make $10, how many shares should I buy, and what kind of percent should it go up for me to make that money? So if you want to make $10, you have to do, okay, if I want to make $10, I'll buy 10 shares at this price. It has to go up to this price in order for me to make the amount of money I want to make. Now, and personally, I look for stocks that have at least a 50,000 volume. I try and set my stop loss to about 5 cents under what I purchased it for. And the share size that I do, the position I do, I usually try not to risk no more than 2% of my equity, or whatever if you have a margin account, then you don't want to do at least 2% of your buying power, because at the end of the day, if you do more than that, you'll always come out in the red because everything will just work against you. So to me personally, that's how I day trade. That's how I trade. I do 50,000 volume, 5 cent stop loss, and no more than 2% of my current equity. That way you're minimalizing how much money you lose. Because if you're trying to do more than one trade at one time, and you're trying to balance a lot of stuff, more things can go wrong than good, and you'll wind up losing a lot more money than you expected or even hope to lose. So, these are just a few things you need to make sure you keep an eye on when you're trying to learn how to day trade, and when you're in the beginning portions of day trading. Honestly, in my opinion, I feel like if you start off and you go into paper trading instead of trying to go straight into money, then it'll help you overcome a lot of these a lot faster. And a lot of people really don't agree with that, because with paper trading, you're not trading real money. You're not attached to it like you could be, because at the end of the day, it's not real money. It's not something that I have to worry about. It's fake. I can just do it. Oh well, I lost $2,000. I lost $100. I lost whatever, and then you're just like, okay, you move on. When you go into trading your real money, then you get a lot more emotionally attached. But if you try and start off paper trading and you see, okay, I failed here, even though it's not fake money, even though it's fake money, I need to know how to handle it. That works out a lot better than you trade, you lose with your real money, and now you're going berserk because you feel like the stock market's out to get you and you're just destined to fail. So that's my little spill on that. If you have any questions or anything, head over to our Facebook page and give us a quick little comment, and we'll make sure we tongue twister. Head over to our Facebook page, and we'll make sure we get all your questions answered. If you like what you see, drop a subscribe. I'm a little sick. That's why I'm doing all the little stumbles and stuff. I'm a little congested if it doesn't sound like it, or if you haven't noticed. So that's about it for this.